So rather than letting Bitcoin happen to it, you embrace it early, so that obviously things like buying it, having a lot of companies located here, and then also trying to recognize that because of the Triffin dilemma, there are downsides to some of the asset practices of non-neutral reserve assets, like using the treasury as the primary asset, and embracing some of the advantages of neutral reserve assets, hopefully coming back into the system like they were many years ago. In emerging markets, and it's something that we're often in the U.S. kind of blind to. Most of us here have bank accounts for our various kind of needs. Obviously, you shouldn't hold anything in dollars that you're want to keep on too long, because they're going to be melted away. But we have the infrastructure of a bank, and these provide some services, like bank-like services, to countries where they have less stable financial systems, and they want that. So I think there's a role to play, but I think in the long arc of time, Bitcoin is much more valuable. I mean, we're looking at right now, Bitcoin's a $2 trillion asset. The whole dollar system, depending on how you measure it. So if you look at the broad money supply plus the whole bond market, and the global fiat market, we're looking at hundreds of trillions of dollars. And what's challenging is there's a network effect, because unlike Bitcoin, where there's not a lot of Bitcoin denominated debt, in the fiat system, there's a lot of debt denominated in those fiat currencies. So that represents inflexible demand for those currencies. And then people have to kind of save in the asset that they owe at the end of the month, or that they owe on a bond contract or a loan or something. So I think this process is going to scale, and it's kind of rivaling gold. Once it crosses, 5-6 trillion, it's basically bigger than the monetary base of other countries in the world. And it's going to take years, but it's so far that Bitcoin is like over 100,000, despite the fact that interest rates are 4 to 5%. If you would have asked people that 3 years ago, a lot of people were saying Bitcoin is a zero interest rate phenomenon. It only makes sense when interest rates are near zero. And one of the new signals that happened this time is that despite the fact that the Fed got about as aggressive as they could, they kind of raised interest rates as quick as they could until they started blowing up the banks. That was kind of the ceiling that they ran into. And, gold and Bitcoin had a little bit of a headwind temporarily, but then they just kind of shrugged that off. So gold soared from 2,000 to 3 price jump from the ETFs. And then we saw another big price jump from the election outcome. I mean, that's a real thing. When especially like portfolio managers, when they're looking at this, there's some part of them that's thinking, what is the probability that the U.S. gets really aggressive on Bitcoin? So they have to take into account that possibility in their price projections, especially if they're running assets for their clients and they have a fiduciary duty. And when you have an administration that's more favorable to it, at least kind of in the eyes of the market takes out some.
And there's a debate to be had about whether some of it is necessary. Like, do we need to build pencils? I don't think so. But there are some things that are not made in America that I think need to be made in America. How does Bitcoin solve for that?
I don't know if Bitcoin solves that specifically. I think in a roundabout way, potentially. I think when you look at some of that industry to flourish, potentially number one, I guess maybe number two, yeah, I don't know, maybe number one, I think it's just kind of constraining the government, because I think in some of those instances, we're really fighting ourselves. I don't think we're talking about bringing t-shirts and sneakers back to the US. It's really those key things, and it's really a political climate.
Yeah, James?
I mean, if you think about the biggest problem the U.S. has, right, is that we're being frozen or locked away from you. So that's really that's a big deal for the U.S. and embracing that and pushing forward on it quickly is that's really important in my opinion.
Appreciate it. So these conversations are happening in DC all the time, and how do we negotiate this idea of being a relatively free-floating currency and also trying to bring manufacturing back to the United States? And Bitcoin's role in that and is complex, and I think that's right, that a lot of it lays at the fault of policy
disruptions. Try to have business be as smooth as possible, and that's the damage control that they can do as they kind of make this transition.
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your